Hey guys, welcome back to another video. Today we'll be taking a look at Walgreens Boots Alliance. So, starting off with their PE ratio, it's currently at a 17.81, which is great as it's a solid indicator of it being potentially undervalued. I'd also like to look at their dividend yield, which is currently at a 3.66%, which comes out to 48 cents per share, which isn't too bad. It's always nice to see a company give back to its investors, even if it's a little bit. Before we look at the income statement, I want to see what their gross margin and return on invested capital is. Right now, the gross margin is almost 20%, which is all right because the lowest you want this number to be is 20%. Then with the return on invested capital, it's not good because it's at a 3.6% right now, and you want this to be at 7% and above. Now getting into their income statement, we're going to start off with the revenue. So as of the most recent year, they're bringing in 132 billion, which is up roughly 14 billion from 5 years ago. So this is great to see. In 2020, they took a little dip, which I won't judge them for because we all know what was going on in the world, and they seem to be climbing back as they're up in 2021. Now moving into their net income, they had some growth going to start off, but then recently, even before 2020, they started going downhill with this. Hopefully going to the future, we can see more consistent growth. And the last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. As you can see, it's looking amazing. They've been decreasing this every year and are now down 215 million from 5 years ago. Taking a look at their balance sheet now, we're going to start off with the current assets. So their current asset growth is not looking good as they brought it down to 15.81 billion, which is a decrease of 20% from 5 years ago. Now with the current liabilities, as of 2021, they're at 22 billion. So this is really bad to see as they have almost 6 billion more current liabilities than current assets. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to be improved on year after year. As you can see, it's looking a little weird to me. In 2017 and 2018, they were showing growth, but then they took a big dip in 2019 and have not recovered to those levels yet. It is good to see that the last 2 years have shown growth, but I don't like how it's overall down right now. In conclusion, Walgreens has some below average financials. Some criticism I have for them is they need to continue working on their net income, and I need to see them have more current assets than current liabilities before I'm comfortable enough to invest into this company. Finally, I also hope to see them improve on their cash flow as it's such a vital part of the company. When it comes to buying this stock, I personally won't be buying this unless it goes down to the $30 range. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I am not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.